Good afternoon, traders. It is Antoine Farrar back with another video with Digital Goatz Academy. Welcome to our market forecast. So what we do on market forecast is pretty much give a projection on what we believe the direction is of the market up until what Thursday, Friday. Now, what's important for this week is that there's two big things going on, right? One, we have non-farm payroll, and we have the 4th of July coming on, Independence Day on Friday, right? So Friday, the market should be closed, which would move non-farm payrolls to Thursday. Now, unless the market is going to stay open on Friday and then close at like 12 p.m. Eastern time, then maybe NFP will carry over. Then I haven't checked the news all the way out to the week. So I just got to see when the actual outlet, the news article is when NFP is going to be released. So if it's Thursday, then I'm probably done trading Wednesday. If it's Friday, I'll probably extend, the trading period up until Friday. But I just wanted to point that out. Now, the next thing I want to point out, traders, is that before we get into our forecast, this is the dollar index right now, right? The dollar, the DXY, as investors and traders know it. For us as the normal people, right? We just know it as the dollar, the US dollar. So you can see that based off of this chart, the dollar is down. It's negative right now. So where we want the dollar normally to be stable is anywhere from like, 99 to like 101, maybe 103. Anywhere in that fluctuation is like a stable dollar. Anything that goes a little bit higher adds into inflation. Anything that goes a little bit lower is a recession. Now, people will argue against me. I've had this all the time where other traders have argued that no, that doesn't mean it's a recession. I don't care what they think at this point, because the last time we had this data was pretty much in 2001. Obviously, most of us that are in America, if you're at a certain age, I mean, if you're around my age, you know what happened in 2001. You had the World Trade Centers get hit, and that actually drove the market down. But we didn't go into a recession until 3 years later. Yep. We didn't go into a recession until 3 years later. And even that year, we didn't end off bearish. We ended off the year bullish, actually. But that was pretty much the major event that triggered the market into going into a recession. Now, I wasn't trading at this time, nor was I old enough to probably even care about what this market was doing. But I'm sure there was other factors that played into the dollar crashing like that, outside of just the trade centers collapsing. There could have been other things, because again, what I'm pointing out, traders, is that we can spot this information ahead of time, and then by the time it gets to, the population, to the everyday person, then the news is saying, "Oh man, we're in a recession, or we're in inflation." But as traders, as investors, we can spot these moves and take advantage of it. You can trade the dollar, the DXY. Somebody could have sold this the entire year well, for 4 years straight, somebody could have sold it, which is kind of crazy, all the way up until basically 2008. Now, for me, I went into the army in 2008. I mean, obviously, I'm giving y'all a little bit of history about me, right? But I went into the army in 2008. I only heard talks of the recession in 2008 when I was heading to the army, because it was actually a better choice for people to go to the military than it is to stay as a regular civilian with the 9 to 5 wage, right? So by the time everybody knew about it, I mean, we're 7 years, what I'm saying, into the future. You see what I'm saying? So now, when you look at the dollar and how it responded when we were triggered into a recession, that was the major event that took place. Was the last major event was what? 9/11, when the planes hit the trade towers, right? So if we look at the where we're currently at now, what happened? January. Basically, ever since Trump has been in office, the dollar has been taken. That's a major event, but I don't think it caused the dollar to necessarily plunge. I'm just pointing that out. Now, we did have another event, which was Israel against Iran. Because we hit that peace treaty, yeah, because we hit that, I think it was, or truce agreement, whatever you want to call it, because the ceasefire, I'm sorry, because they had that ceasefire, um, that probably played a factor into it, but I don't think that just alone that is making the dollar plunge. But regardless, looking at the technicals, we're below 100, which would be like a dollar even. We're below 100. Being below 100 would, think about it, would mean the value of the dollar is no longer a dollar. So the value of the dollar is technically 96 cents. You know what I'm saying? You see what I'm saying? So when that happened in 2001, going on into 2002, well, it basically happened in 2002, the dollar was below. By the time they realized it, where was the dollar? The dollar was below, and we were pretty much at the 2008, 2007 levels. But the dollar was already below that in 2002. But somebody knew that there was a recession going on. But the rest of the American population just saw that it was a recession after, you know what I'm saying? Everybody's like jobs are in jeopardy, people are losing their jobs, people are going homeless. You know what I'm saying? So we're in a recession right now. That's the whole point of this conversation. I don't want to stretch it any further than it needs to be. We're in a recession right now. And until the dollar decides to turn around, which I don't see that happening because the momentum is so aggressive to the downside, that people are going to feel the effects in the economy. So as traders, as investors, hell, as everyday people who fucking make money, you need to pay attention to this type of stuff. You know what I'm saying? Because it's going to be affecting you and it's going to be slow, but it's going to creep up. By the time you realize it, it's going to feel like it's always existed and it's going to hit hard. You know what I'm saying? Unless we get a push around from the dollar. So I just want to kind of point that out there because nobody is talking about that we're in a recession. And yeah, others would argue that, oh, that doesn't make it that we're in a recession. I don't give a damn what they say. I use past events to acknowledge the present and also what may happen in the future. So that's how trading works. That's how this market works. That's how you're even able to make money by identifying significant events or previous events that happen that the market could necessarily mimic. You see what I'm saying? So I kind of went on a tangent over there, but I just wanted to point that out. But also, since I went into that tangent, go ahead if you're following this video, hit that like button, comment, and subscribe. But let's go ahead and get into our normal routine. But I just wanted to point that out because don't be surprised. You know what I'm saying? I've kind of been talking about this as traders, well, as investors, we've kind of been seeing this. So it's getting to the point now where you need to build a business or you need to have multiple streams of income because you now need to become recession proof. Because if not, you're going to feel the effects of it. You and your family are going to feel the effects of it. So that's just my little, 2 cents as an investor. But again, if you choose to ignore it, that's fine. If you take it, I think you'll be in good preparation. But only time will tell. And for me, I'd rather be in preparation like the zombie apocalypse. You got more people prepared for that than stuff that's going to happen in like 4 or 5 years that could feel like the zombie apocalypse. You go homeless, I'm pretty sure it feels like the zombie apocalypse. You know what I'm saying? But I digress. But anyway, what happened? Pretty much our forecast for this week is that I'm still remaining bullish, right? US 30. Oh my gosh. Like, oh my gosh. Have we not been talking about this? Have we not been talking about this? The only thing that upsets me is that I actually got out of my trade today and I could have stayed in it and I projected it where it may have gone. So let's talk about this morning specifically, or well, I haven't seen y'all since, yeah, Sunday I dropped. So I dropped my video yesterday. So yeah, basically a whole day is like in between YouTube. Um, so what happened Sunday? Basically, the market gapped up and it continued. Where were we at? Sunday. This is Friday. Okay, so S&P gapped up, but US 30 didn't gap up on Sunday, which I thought was very unique. And now they're breaking into their own market cycles as far as like indices. Hold on real quick. Okay, so US 30 didn't gap up on Sunday's open, but S&P 500 did. Now, again, I don't really care to look at the NASDAQ. I've already mentioned that. Like, I don't, because I believe that the NASDAQ does opposite of what US 30 and S&P does. So this is actually the gap, and you can see that it pushed up Sunday. So it did gap up. It came back to collect that gap Monday, then it pushed down this morning back to the gap, and then we have the push up for today. So I think this last move was just a pullback, but again, they're showing similar stories. So unless we get like a major sign that we're selling off, man, this is what we've been talking about. When the buy happens, it's going to seem like I can't, we're going to say this. I said this in my community today that I can't fucking believe that US 30 or S&P or NASDAQ went up that high. You know what I'm saying? Like we've been watching this stuff happen. So we've been trailing how the market is supposed to react. We've also been learning that, okay, when it starts trending and it breaks out of these areas, specifically indices, it doesn't necessarily come back and retest like a regular Forex pair. So all this stuff since January of 2025, we've been talking about. You know what I'm saying? Like we're back to that position where we're pretty much for US 30 specifically. Well, I would even say S&P, but US 30 specifically. Remember, our first target for the year that we've been talking about since the beginning of this year, even after the drop to 36,000 was 45K. Was 45K, really 50K, but 45K is our first pit stop. And look how we're almost there today. We have pretty much 5,000, I mean $500 left before we get to, you see what I'm saying? Like a $500 move. This was a $500 move today. $570. And I mean, it might be off. It may be a little bit more, but $570 and then back to 45, say that's a $300 move. From where that is probably a $500 move. So you got another $300 move, which will match up with how US 30 does react. And US 30 will move like a th in a whole $1,000. And I'm basing this off of a point zero one. When you start learning like how the market moves and you can actually do the math based off of like how much you would gain, you start seeing that okay, US 30 can go, I think a max of like 3,000, like $3,000 made in like one giant candle on like the daily or weekly, which would have been like a cut, well, obviously a full week or a couple of days. And then at that point, you would have a pullback. You would have some type of reaction where the market would want to collect a percentage of that. Now, it may take its time to do that, but that'll be like the start where the market would want to reverse and stuff. So that's something that I've been noticing. So if we do get another push, which is again from this top point, from this wick, it is another it's almost 300 to $400, which would almost make it like an $1,000 move. And that's if it's going based off of the bottom of this candle right here. Basically, what I'm getting at is that we should see US 30 hit 45K this week. That's what I'm looking at. And that would be a damn good 4th of July. Now, again, I got out somewhere down here, which is crazy because, again, I had it going to 45K. But again, the whole point is making money. Now, the thing that was important today is that it started building consolidation. And I actually told my community that I believe that where that blue zone is at, I'm a scale in. So where this blue zone was at, again, I was tracking the market from Sunday. Market broke out of this area, retested. I drew a line just to see where it was at. Now I'd already identified this area over here to the left side. What is that? A previous high. And the one thing that I emphasize is that now that we're trending, we can't look at it to come back to these lower areas. Wherever it creates supports, that's probably going to be its support. So you can see this shallow pullback that just shot the market up. And I had already drew this line, I mean the zone. I drew this zone when this first candle, it was like still forming. So it was like down here. It was already into the zone. So I drew it. I was like, okay, that's a previous high. That's a previous up. This is a previous high. So to make it simpler, right? You see this valley, you see the market shot down, pushed up, right? Consolidated. This previous high is for this orientation, all right? And then we have another area where the market actually created a double bottom. And I paid attention to that because it's hard identifying this, but if it reacts like that, then that's what it is. So it started pushing down, but it really was just consolidating. But when you're looking at it as a candle, even in the line chart, it looked like it was pushing down. But I had drew this zone and I was like, okay, anytime I see the market like react like this, stop at an area where it's like, that's more likely to be respected than it is to not be respected, because this is just, if we're still trending up, which we were, if we're still trending up and the market is buying, then all it did was what? Retest the previous level, which is a trend, the previous high, in order to keep the market pushing up. I swear, I even said it to almost to that statement that I think if basically if price holds right here, it's going to push the market up to continue buying up. And it held. And then the next candle that came out was a monster candle. Oh my gosh, was a monster candle. And then it slowed down around like 9:30, 10, and then it kept pushing up. And then now we're here at this consolidation period where the market is going to basically probably start consolidating upward, but continue. And then it starts creating like this could be a zone now for support. So we can't necessarily look that, oh, well, it broke out of this. True, it did that here, and you would like to think that it would return to this previous high in order for us to buy up. But since we're consolidating right here, it'll probably push up and then do like a range somewhere around this area if it's going to respect it, unless it's going to blow through it, if that makes sense, right? So we're still bullish. Again, if you look at the Hakanashi candles, still showing you bullish momentum. The only thing we could possibly get is if the market decided to correct itself and push down at least these levels, but it hasn't been doing that. Look what it's been doing. Every time it's been doing it's been doing shallow pullbacks. Each high is broken out of, since it broke out of this area, shallow pullback, consolidate, breaks the market up, consolidates upward, breaks the market up. Okay, pushes down. You know what I'm saying? Like that makes sense. I mean, even if it didn't make sense, it's like that's what happened. Okay, push it up. We got new data. So from here, this could be the next consolidation period, and then it pushes up, and then now the market, just like I said, will be testing this area because this is the most recent high that was broke out of because we're trending. So I hope that doesn't confuse anybody. We're trending, so wherever it creates support, which is normally the previous high, that's where the market is going to keep buying up from. Don't get fooled because again, it did drop out of this area and then push back down. Don't get fooled as far as like this area makes sense that the market didn't like come back down to these positions, but you see anybody that probably was, trading US 30 got beat up right here. So again, our next move, because we probably will push up, US 30 will probably come back down to this previous high after it touches the 45K, which is good for us because that's kind of like something that we predicted that after it touches 45K, that should create have we already been to 45K? We came from 45K, didn't we? Yeah, we were at 45, like 200. So I knew it was gonna touch 45K, but after it breaks, it'll probably, yeah, man, we could see 50. That would be crazy. That would be crazy. I don't want to say that we won't, you'll see 50K without the market trying to resist this area and at least coming back down to one of these zones, but we'll see. But that would be crazy. This whole year has been crazy. I mean, look where we're at with Bitcoin. Like, so to think that it couldn't happen, and the fact that I watched US 30 go almost to 45,000 today, like a big ass jump, you know what I'm saying? I mean, we weren't even, it took us a shorter time. Did it? February, April, April, April's the third. Well, no, I would say it took us the same amount of time to drop this market as it did to buy it up. You know what I'm saying? Because I'm thinking of the presidential election and the market got bullish after Donald Trump won, like he won the polls, and then it actually started pushing down January, created resistance March, and then brought it down. So about the same time, you know what I'm saying? But look how fast like the buy, like we didn't take all year to get here. We took basically half the year to sell and buy back up. So more than likely by the end of the year, we'll probably be at 50K. Man, that the way it's looking, we'll be at 50K. I don't want to, oversell ourselves as far as or overshoot the market, and it could do like a major pullback. But the way this momentum is, this is something that I haven't seen before. And normally from indices, like the market is gonna go up before it comes down. You know what I'm saying? So he'll probably break out of all this shit and then want to pull back to these levels. So strap your seatbelts in, traders. Like, get ready. I mean, this is what we've been talking about. So I don't even know. I don't even understand if nobody's not making money from this because we've been talking about this. All you had to do was just put yourself in position during the New York session. Hell, even London going into New York. You know what I'm saying? And analyze the market and just find your entry. I mean, since we've been, what is this? Since June, since towards the end of June, it's been buy city. And really all somebody had to do is just buy and just hold, even with the pullbacks. This didn't even come back all the way to this position. And I thought it was going to sell back down. But now that I've already seen this, I know that we're not going to push back down until we get major news to force us to push back down. What's coming up in September? Um, rate cut, right? Possibly, supposed to be. So if a rate cut is coming, and I've already explained this before, or I've already tried to push this out to simplify it. If a rate cuts basically happen when the market is too bullish and it needs to basically be put in its place. And a rate hike happens when the market is too bearish, meaning that it's selling too fast. And basically, the Federal Reserve steps in to create a pullback, you know what I'm saying, in order to correct the market to stabilize it, because if not, the market will get out of hand. So that's when they step in. And normally you can just ride this wave. Obviously, there's still pullbacks. It's not, don't get crazy with it. There's still pullbacks that happen in the market, but you can pretty much like imagine 2 Sundays ago, we could have pretty much had to buy. I mean, this was the pullback. What was this? Monday, Monday into, yeah, the following day. Basically Monday. So 2 Mondays ago, you could have still been in the buy. You see what I'm saying? And it could have just been automatic. Like, I mean, we didn't know that obviously, but could have just been automatic that you could have still just been in the buy. So, like I said, now that we're trending, it's basically wherever the support structure is going to be at. Let me look at S&P real quick. So just be prepared, traders. It's gonna continue going up. You just can't let it manipulate you into believing that the market is going to sell because it's going to give you very good images that it's gonna sell. It's gonna make you think it's selling. And even when it pulls back hard, it's probably pulling back to an area that you just didn't spot in order to buy back up. Do not get fooled by the sell. Until we get to September, like I said, I don't think that we're selling off. So once the Federal Reserve steps in and actually induces that sell that we need, and it might not even be the sell that you're thinking. It might just be just a major, it'll look like a sell, like a major sell, but when you look at it on a hard time frame, you'll be like, oh man, that was just a pullback. But trust me, if you win it and you on the opposite side, it's gonna look like that market is goddamn selling. You know what I'm saying? So Bitcoin as well. I think it's still so Bitcoin what was that this morning? So from this weekend, I did buy up and I did mention that I'm still bullish on Bitcoin and I think that it's only testing this area. I like that it did bounce up and I think that it's going to continue. All this stuff is just, again, it's just finding support structures. So you just have to be in preparation to buy when it's showing you that it's buying up. You're not going to have like a perfect entry, but hell, it's going to be closer than farther away, paying attention that, okay, let's look at this Fibonacci move from the low to the high. For example, if it started buying up. Okay, that's not exactly at 382, but the fact that it rejected it with that wick, that's possible. And again, if you followed me, I've always talked about whenever you do look at fib, if it doesn't touch the area, just draw a zone on top of that to see if the price came within that zone and stuff. Because obviously the space, we don't know what the true space is for fib. So it could be like, even though we have a exact point, the area, you know what I'm saying? We could not be paying attention to the area. And the same thing can go, you see what I'm saying, for the 50% and so forth and so forth. So we don't know how far technically the Fibonacci stretches as far as like covering like a price zone, if it's from 105.3 to 105, I mean 104.27. See what I'm saying? So I draw the zone that if I start seeing the market react to it, basically shooting up, reversing, whatever you want to say, I know that, okay, it covered the zone within the 382. So I still count that as 382. But what's here? We have a previous high. And if the market is, again, extremely bullish and trending up, it's gonna continue pushing the market past these levels. So I already said that I believe that Bitcoin is going. I didn't think that this year, but I believe our next stop is 120, and it'll probably be by before the end of this year or 125. So yeah, like just strap your seatbelts in, traders. I mean, it should be an easy ride from here on out. And we mentioned that at this point, once we get to April, the market will start trending up. We said that. I mean, if you can look at some of my older videos, I don't know exactly which videos I said that in, but we said that. You know what I'm saying? The market starts trending, you just got to find your position. There's no more, hey, it broke this structure, so it should come all the way back to this zone. Oh, no. It should start creating its own forms of support and then just continue buying up. But that's all I got for our market forecast. Like I said, I'm still bullish on all indices across the board. Let's look at the NASDAQ real quick. Now, the NASDAQ had a pretty good move. It sold hard, and I think it had a pretty good move to buy back up, which was earlier today. So this was the move that it sold from Sunday. So you can see, or was this Friday? Okay, you can see it tested back Friday. But that's why I don't like trading the NASDAQ with S&P and US 30 because it just does its own thing in my opinion. But it did come back to a previous level of support. So if it is respecting this as support, the only reason I brought up NASDAQ is because I believe that this is a good move to buy back in. So if this is respecting the market as support, then we have our retest right here. Hopefully we get a gap up as the market opens back up at 6 p.m. Eastern time or 6:30. That's what I'm hoping. But even if we have like a small gap down, well, not for NASDAQ. NASDAQ could do its own thing, but S&P and US 30, I'm looking for a gap up. NASDAQ, I don't know how it's going to respond because I don't follow it. But this does look like exactly what I wanted to see because when I saw it this morning, it was selling off. It hadn't produced like this turnaround yet or this retest candle. So now that it produced like, hey, I pushed up and then I may be just retesting either all the way back down in this zone or a previous high, I do think that the NASDAQ is buying up. Not to mention, what have I said before, traders? Said the stock market is booming. As long as the stock market, especially some of these stocks that are influenced by the NASDAQ or directly under the NASDAQ or Dow Jones or S&P, I have a lot of NASDAQ stocks. That's why I don't even mess with NASDAQ. So I know NASDAQ is going up. Again, I don't know how aggressive the pullbacks are going to be, but we've been talking about this stuff. You know what I'm saying? So, I mean, if you miss out, you know what I'm saying, seeing all this information and it's practically for free on YouTube, like I don't know what's going to help you because paying attention to the economy and actually learning the skill set of trading, I think is super important for a lot of people going into the future. You don't have to try to do it to be a millionaire, but to make extra income, yeah, you can come in this market and make a couple of extra dollars, 200, 100. That's good money, you know what I'm saying? When you don't got it or it seems like it came out of nowhere. But I'm not going to go on a rant because everybody is going to they're going to witness the fruits of our labor. And it ain't even about what I told you so. It's that, hey, we're doing it. Anybody else can do it too. So this is Antoine Farrar signing out. I will see everybody on our next video with Digital Goatz Academy. Peace.